Hello everybody, my name is Mark. Welcome to another one of my investing videos. And in this video, this is the first video that I've ever done or that I'm ever doing that is me doing some live trading or some live rolling out or some risk management. So this video I'm making as I am getting ready to do what I'm going to do with my money. Now first of all, Twitter here. This is Twitter, and you can see that Twitter took a drop from where I sold to open my puts. Now let's go back here, and this is what I did right here. I bought back my 29s and I sold my 32s. Okay, and I got 49 cents, which is $49. Did 6 of them and took in $282.46. Okay, now since then I really don't have anything to worry about. I just have a strong desire to make money. I don't even need to do anything, to be honest, but I'm going to anyways just because I like making money. So you can see right here, these are my 6 puts that I sold to open right there, and you can see they're at $69. So I got 42, they're up to 69, so 52, 62, 72, 30, 27. So 27 times 6 is what, like 160 bucks. That's a loss for me because I am short those positions, right? And if you notice on my positions here, these are the 6 right here, and that's a loss for me. See, you can see the gain right there is showing a minus 132. I guess I overestimated or over multiplied, but that's what I'm down on those right there because they're shorted, right? I sold to open those. So going back to my account here, here we go. So that's a loss for me. Let's get rid of this thing. You know, as I'm doing this live, you're gonna see these things pop up on the side. I apologize for that. So as a way, and I have nothing to worry about. Twitter can go all the way down to $31 and like 68 cents. Quick reminder what I got here. No, 49. Okay, so I'm not even, that's why I overestimated, because I misremembered the number. I actually got $49. Okay, so that means Twitter can go all the way down to $31.51, and it's at 32.26. But since I really love making money, it's like one of my hobbies, then I've decided that I am going to add to my position and give myself some more money making potential. So I'm not going to roll these down. What I'm going to do is I'm going to buy 4 more put options. So that's going to put me up to 14. Right now these are my long puts right here. I have 10 of them, and those ones I'm going to buy the same ones long term. January 17, 2020, it's like 500 days from now. It's almost a year and a half. I'm going to buy 4 more of those, and the market is open right now. It is 9:42 Pacific time, West Coast. That's where I'm located at. And market opened at 6:30 in the morning. Market closes at 1 o'clock. That's 4 o'clock Eastern time. And it's only 9:42, so plenty of time to do my rambling here and explain what I'm doing. So first thing I do is I look at my balance and make sure I have cash. So you see I have a lot of cash. This is right here, cash available for withdrawal, and I'm kind of shifting my mouse arrow right there. And so I have all that cash that I can do whatever I want. I can buy puts, I can roll up, roll down. It's good to have lots of cash on the side when you're doing things like this. And so since Twitter has made a drop, I want to make darn sure that I make that premium. Okay, remember it was $49, and if I didn't have all that money on the side, maybe I would panic. Maybe I would just close out the position and get all nervous. But now I don't have to do that. Now I can buy 4 more put options. So that's the first thing I'm going to do, is buy 4 more put options. Why am I going to do that? Because if Twitter kept dropping and I did not have those 4 puts, then I would continue to take further losses on these 6 shorted puts. But by buying 4 more puts, then that gives me a little bit of money making ability on the downside if Twitter keeps dropping. So let's go to Twitter. let's go to my option chain and let's go to this put for 2020, 520 days out. And there you go, the $32 puts. The bid is 610, the ask is 630. So I'm going to click on that. I'll click on the bid. Ticket comes up, and I'm going to buy to open, and I'm going to put in 4, and I'm going to put in the middle price. I'm going to put in 620, like that, and then I'm going to review orders, and that's another $2,480. And now I'm actually going to place the order. This is happening live, and bammo, there you go, my limit order is in. Now I just sit here for a little bit and wait for the order to get filled. Now sometimes I get impatient, and I'll look at my order status and see if it gets filled, and I might drop it down, you know, close to, because the way I see it is, if I'm going to make a lot of money on a particular position, I'm not going to fret over $5 or $10, you know, on a contract, right? That's pennies compared to the money that I could make. So instead of sitting here all day and checking my order status over and over and over, then what I'll do, just to get the order filled, is I'll go to my order status and change it down. I don't fret over little pennies and nickels, okay? If you watch my video on my returns, I'm up over 18% for the year right now, and so I don't fret about little stuff like that, about those little costs. But before I do that, just let me show you something here. I'm going to go back to the option chain and bring that up. Notice the bid went up from 610 to 620, and that's because of me, because of my limit order. So the market knows when you do something, and things change. And so now that's a very small spread. So there's probably lots of option traders out there that are saying, oh, thank you, Mr. Mark Jackson, thank you for creating a low spread. And it's got, this particular put has a low volume. Now this put, wow, that put has 1,000, but I'm not, that's also pretty far out of the money. I don't want to buy it that far out of the money. But there are a lot of bear people out there that believe Twitter is going to go down. Twitter is one of the most actively shorted stocks in the entire Wall Street. And so if I go to out of the money, let's take a look at some lower options just for fun. Looks like that's the only one that has a lot of volume. But if you look at these open interests, OPINT, that stands for open interest. Those are all the contracts that have been written. So that means, like, for example, this $20 put, there is over 11,000 people, 11,522 people that have either bought or sold and hold a position that either are the option that own this contract, this $20 put option. Okay, this one is 10,000. So Twitter has a lot of activity. It's one of the things that makes it such a good stock to be trading up and down, right? So order has not yet got filled, still sitting there at 620, still waiting. So just to get the ball rolling, I am going to drop it down, and cost me $5 more. So I'll change the price to 615. Actually, I gotta roll it up. It definitely won't get filled if I go down. I'll put it up to 25, and then put replace. And this, I'm like 99% sure will get filled. Estimated total $2,500. So I'm spending an extra 20 bucks, and then I'll click the submit. There you go. So this is the canceled right there. These are the ones that got filled. And now I'm not going to do a lot of talking. I immediately want to sell some puts against those. So I am going to go back, and I've already got this all mapped out. I don't want to wait around. I'm going to actually let me go to the option chain. That's what I want to do. I don't want to waste any time, because I want to get as much. Darn it, I mucked it up again. Option chain. Why does it keep doing that? Oh, I know why it does that, because I'm clicking on the puts. I want to click on the shares. Okay, there you go. Now we're cracking. Now I can go to the option chain, and I've already got this mapped out, and I'll explain why I'm doing what I'm doing in a minute. Okay, so I'm going to sell these $31.50 puts, and these expire in 9 days. Count them, 9 days. So I'm going to go to the ask, and I'll explain in a minute why I'm doing what I'm doing. So let's sell 4 of those and review order, place the order, and hopefully it'll get filled quickly. I don't want to wait around for this. Now let's check the order status. I'm waiting. Did not get filled, so without even looking at the spread, I'm going to drop it down a penny, click the replace. I just want to get this filled, and there, it got filled. Okay, now I can do a little bit of talking why I did what I did. Okay, going to my transactions here, my original position. See, notice that my transactions increased because I just did those. So these are my today's transactions right there. This is what I did the other day, 2 days ago. Okay, I closed out my $29 puts, 37, and made some decent money, and then I opened these ones. Okay, these are $32 puts. They expire on August 24th, and I got $49 for them. Now, if you look at those puts, those are the $32 puts right there. They're up to $74. Okay, so what does that mean? That means I'm taking losses on those, and so I could panic and close that out, or I can do what I just did, buy some more puts. That way, if the stock keeps going down, I'll make money. Now, since I don't know how far Twitter's going to go up or down, Twitter is a lot of volatility, which is one of the reasons why you can find a good spread on these options. I don't know what Twitter is going to do. I want to stay in the game. Excuse me. So the natural thing for me to do is buy some more puts. And let's look at my new balance here. So I still got $14,000 that I can do risk management with, rolling options up or down, or buying more puts. Like if it drops again, I'll hang on to these, and I will be making money. Because if you look, now I have 14 contracts. I had 10, now I got 14 of them. So these $32 puts will make money all the way down to $31.50. So 4 times, let's see, $31. Twitter right now currently is at $32 and let's say 20 cents. So 70 times 4 is $280 plus this premium that I just got. So I would make about 300 bucks on those. Okay, I would still take losses on these, but at least it would be mitigated by these 4 puts that I just got. So by throwing a little bit more money into my position, it's kind of like hedging. It's kind of like a hedge against my hedge, right? And so that's why I bought those extra puts. Okay, so that's it for this video. If you have any questions, feel free to leave a comment, ask a question in the comments. And I thought I would do a live video so that you can see it's not that difficult. And if you're new to options and all of this sounds very complicated and hard, learn it, you know, a little bit at a time, one bite at a time, and it's really not hard at all. And it's simple matter of clicking the mouse and calculating your risk, knowing where your break-even margins are, what strike prices that you can buy or sell the stock, whether it's a call or a put. And then I'm a believer, like, I rarely would just buy a call or just buy a put. I would always, like, if I buy a call, I might buy a put to counter that because of the leverage that you get, or I would do what I just did, where I'd buy a put and then sell it. Okay, so if you have any questions, feel free to ask. If there's an idea, something that you want me to do, something that you want to explain further in detail, leave that in the comment and I can do a video on that. But until then, thank you for watching, and I will see you in the next video. Have a good day.